Yo, what's up, guys? It's Nate the Robber here, and we're going to be digging into three REITs that just reported earnings, and we're going to be seeing, are they a buy after their most recent earnings report? We're going to be seeing how much room do they have to raise the dividend, because these REITs, as you know, have to pay out their dividends by law, and so they have these abnormally high dividend yields that are actually sustainable. So we're going to be looking at American Tower Corp, Agree Realty, which is a triple net lease REIT, which pays monthly dividends. So a lot of people will like that one. I have a lot of good things to say about Agree Realty. And on top of that, we're going to be looking at Vici Properties. This is the last one. They're in the casino gambling kind of industry, and they're also at a very attractive valuation. So without further ado, let's just get straight into the analysis. Hope you guys like this kind of stuff. And if you do, don't forget to drop a like on the video for me. But let's start off with American Tower Corp. So there was a lot of news that we covered about them a few months ago where they actually cut their dividends. So their dividend went from $1.70 back to $1.62. But let's see what their payout ratio is. So we want to look at the core FFO per share, and that's what this number is right here. And in the most recent quarter, it was $2.86. And well, their dividend literally only cost them $1.62. So I know the dividend yield is super tiny. It's only 2.76%. That's because they have such a low payout ratio. Like, they literally have room to double their dividend, because most REITs have a super high payout ratio. Actually, let me go ahead and show you how much room they have to raise the dividend. So the number is up 10.67% year over year to $1.34 billion. So remember that number right there, $1.34 billion, and their dividend only costs $757 million. So American Tower Corp definitely has room to raise their dividend. And have you been diluted as a shareholder? Literally not at all, just 0.17%, which is literally nothing. But there's another thing to keep in mind about this company is that they do have a lot of debt, $39 billion. So the rest of this money, the FFO, is really going off to paying off the debt. But the thing is, American Tower Corp has such predictable income that literally they can get loans for super cheap, really low interest rates. So the high amount of debt doesn't bother me, but the whole industry has a lot of debt. It's really normal. Like, their two biggest customers are AT&T and Verizon, which have lots of debt, which actually inflation helps out the debt. But I don't know if inflation's coming. But look at this. I wish I still owned American Tower Corp. I did own them at one point. And look, just over the past week, they have flown up from $209 just in the past couple days all the way up to $236. So American Tower Corp, I really, really like. So yeah, that was American Tower Corp. Now let's go ahead and get into the next dividend stock, which is actually Agree Realty Corp. So this is one that pays you monthly dividends, and they have a dividend yield right now of 4.2%. So pretty cool. And look at how the stock price is done. It's kind of like American Tower Corp. Well, it's really just over the past 2 weeks, they've just jumped up like crazy, going from 61 to 71. They've gained over $10 per share. So you get the dividends and you get the high stock price appreciation. So every single month, Agree Realty will pay you 25 cents. So we got to quarterlize that. So we got to times that by 3. So that's 75 cents. We want to make sure that this number right here is above 75 cents every single quarter. And it definitely is. It was actually 96 cents in the most recent quarter. Let me visualize that payout ratio for you. So in the most recent quarter, they made $96 million. So remember that number. They made $96 million, and their dividend only cost them $77 million. And if you're like, well, that payout ratio still seems kind of high, remember these are REITs or real estate investment trusts, and they have to pay out most of their dividend income by law. And you don't actually look at net income for REITs, because if you did, remember they made $54 million in net income in the most recent quarter. That could not afford the dividend. So for REITs, you get your net income, and then you add back the depreciation and the amortization. And that's how you get this number right here. That's how you want to look at real estate assets, because you have to add that back. Here in my Robinhood portfolio, I actually own their competitor, which is actually Realty Income. They have very, very similar assets and similar tenants. They're both triple net lease REITs that pay you monthly income. So Agree Realty is kind of like the smaller version of Realty Income. It just has a smaller market cap. And honestly, I think Agree Realty has some more select tenants, which are better than Realty Incomes. We're just doing a financial analysis on this video. This is crazy. We're up 15% basically on our Realty Income shares, not including the dividends. So we also have a pending dividend coming from them of almost $8, which is awesome. So yeah, that was Agree Realty Corp. Now let me go ahead and show you the last dividend stock, and this is Vici Properties. I have a lot of good things I want to say about this company right here. So they have a dividend yield of 5.27%. So out of all the REITs on this list, Vici Properties actually has the highest dividend yield, and the stock price appreciation is pretty good. Like, if we zoom out, they're well above the 2019 level, but let me go ahead and visualize their dividend payout ratio for you. So here's the core FFO. They made $614 million in the most recent quarter, which was up 15% year over year, but we're also comparing to a quarter that was down 18%. But either way, they made $614 million in the most recent quarter. Very impressive. Remember that number, $614 million, and their dividend only cost them $432 million. So Vici Properties, of course, has a lot of room to raise their 5% dividend yield already. And you really haven't been diluted either. Well, you've been diluted 3.47% year over year, but I'm assuming they've acquired some new assets. So yeah, look at this. So from 1 year ago, they owned $42 billion of assets. Now they own $44.5 billion. And they have a very safe balance sheet assets to liabilities ratio at 41%. And that ratio actually went down from 1 year ago. 1 year ago it was 43%, now it's 41%. So it's kind of the small things that add up over time, which is really cool. But here's the thing about Vici Properties is they actually crank out net income. I'm not actually sure why it's different where their net income is actually higher than their core FFO. If anyone knows why that is, let me know in the comments because it actually confuses me. No other REIT is like this. And because Vici Properties has so much high net income, look at their PE ratio. It makes their PE ratio look dog cheap of 12.3. So I'm not really sure. If I looked at a payout ratio based off the net income, it would look even better. But I don't think you look at net income for REITs. Like if we did, look, they made $752 million in the most recent quarter. They could nearly double their dividend and they could easily afford it. So yeah, that's just what I really wanted to show you guys about these three REITs. Congratulations to everyone in the REIT sector because it seems like over the past couple months, no matter which REIT sector you're in, you've got to be up on your REITs. Yeah, I love that you get the high dividend yield and now we're getting stock price appreciation. So congratulations to everyone in the REIT sector. And if anything, now is the perfect time. Well, I don't say perfect time. Not financial advice, not personalized advice. I'm not telling you to buy or sell any of these REITs or dividend stocks on this list. This is all just my opinion. But now could be a good time to potentially start getting into these assets. But yeah, guys, I wanted to keep this video short and simple. Hope you appreciate that. And if you do, don't forget to drop a like on that video. It would really help me out a lot. I also got my REIT Realty Income shirt on. So make sure you hit the subscribe button. I will see you guys in the next video. Thank you so much for being here.